All right, I think we can begin now. It's pretty much 11 a.m. Eastern time here in New York. Hope you guys got your stretches in, got your bathroom break, got your beverages. I just got my tea here, and we're gonna settle in for the next hour and take a look at the markets, the forex markets, from a technical perspective. So I'm gonna take a look at some majors: the euro dollar, pound dollar, dollar Swizzy, and so forth. I'm going to take a look at some short-term technicals. It's been a pretty volatile week, to say the least. So it's going to be, you're going to have to be quick on your feet to get into these volatile moves. Now, okay, so before I begin, let me just read off a disclaimer. The information and opinions contained in this webinar are for educational purposes only and do not constitute trading recommendations. Forex involves a substantial risk of loss and may not be suitable for all investors. Okay. Okay, so let me begin with what happened this morning, heading into the U.S. session. The market here, first of all, 50% retracement, held below 1.4280, held below the 200 moving average. So there was some bearish stance there. The RSI had tagged below 30. For me, that's a bearish sign. But actually, when you look at the market as it's ranging, when the market is when the RSI is above 70, it's overbought. When the market's below 30, it's oversold. But nonetheless, it does give us a bearish signal. Now, it resolved that oversold condition. Then the RSI was not able to break above 60 and broke back below 40. So this here is a bearish move that, again, you had to be very quick to get on this. This is a very bearish move. It had 1, 2, 3 waves, so 2 swings, and then it tested these lows. I mentioned earlier today at FX Times that if we break below this 1.4122 low, that we could be heading back to these lows here at around 1.4055. Okay, what happened here is a quick jab at these lows. And now, when I talk about breaks, I'm not just talking about a little breach of that level. I'm talking about closing below it, then you probably see a little battle, and then market being able to hold below it. That's a clean break. Here we basically have 2 bottoms here respecting the same levels. Okay, and you could look back here, that's around this pivot as well, and these pivots as well. So the 1.4220 area right now held. The market is back up here. Again, it's in a volatile, sort of noisy type of move here. And for me, unless it breaks above 1.4280, we could find again some resistance here to fall back down. Okay, so right now it's a standby mode. See if it could break 1.4280 and stay above. Actually, I want to see it break above 1.43 above the 61.8% retracement level. If I'm to anticipate a move back towards these highs here, near 1.4370, 1.44. Okay, basically the market now, before it was in a consolidation mode with a bearish tilt. Now the market has flattened out, basically with a range between 1.44 and 1.4055. Okay. This zone here, you see these pivots, right? Going back, all the way up 1.43. So, all right. Here, if we break above that, if the RSI breaks back above 60, we're likely to continue towards, as I said, 1.4370, 1.44 high here. Okay, so this is a bullish outlook in the context of a ranging market. Okay, that means, you got to be quick whenever you see a doji. Whenever you see, you have to be careful that the market could be turning. Okay, especially if you're for example, if you're in the short here, you see this doji, that's a good sign to scale out or be ready to exit. Here again, if you see a doji in the 1-hour chart, near this 1.43, 1.4280 area, again, get ready. If you were on the long, my opinion is that I would scale out and get ready to get out. It's not exactly accelerating through 1.43, which would give me more confidence of the bullish outlook. Okay. Okay, so what I was saying before is this completed a ABC kind of pattern, and we can expect some kind of pullback from here. Okay, and if the market breaks below 1.4220, I would look for the market to come back to retest these lows here, 1.4120. But if it respects that level and continues higher, breaks above 1.43, I would look for it to go towards 1.44. Okay. All right, so that's the euro dollar. Let's go to the pound dollar. Okay, the pound dollar, this is the 1 hour chart. I actually want to take a look at the 4 hour chart first. All right, and now I've been bullish on the pound dollar after this move up here. 1, 2, 3, 4, 5, and then I consider this an expanded flat connected with a zigzag. Okay. Incognito, yeah, we all have a lot to learn from the market. I'm continuing to learn, and appreciate you pointing that out. We would never stop learning. There's this thing called intentional ignorance. You gotta believe that you can't have too much pride in that you know everything about the market. We always have to continue learning. Okay. All right. So anyway, from this we have what I would consider some flat connected with a zigzag. Okay. And here 1, 2, 3, 4, 5 down. So I would consider this an area of support for a rally towards 1.63 or towards the middle of this consolidation area. Okay, so we do see a strong bullish candle. Here's another bullish candle in the 4 hour chart, and that could be sort of a bullish continuation candlestick combination here. All right, what we want to see now, you see we have these pivots here, right? 1.6230. Let's make sure we close above 1.6230, then look for 1.63. All right. Actually, from 1.63, this market, we could look for the market to go short there. Right now, I would actually rather buy from prices closer to 1.6050, the 61.8% retracement. I don't want to get into a bull trap. So right now, this rally, this bullish anticipation is limited, and I would anticipate some kind of move back down. If it fails to break back below this low, then we're going to be establishing higher lows and higher highs, and that would build the case for the bullish continuation. Okay, but always be I'm always be concerned about a bull trap for further consolidation, further correction. All right. One thing I want to note here is that the RSI has not broken below 30. So yeah, we did break below 40, killed the bullish momentum. We already saw that. The market flattened out, broke below important pivots here, 1.6220. So right now it's consolidating in the short term. Let's go to the 1 hour chart actually and go down in the time frame, see what we could. You see, this is basically an ABC correction, right? So just like the euro dollar, we could be looking for some resistance here, 1.6220, 1.6220 to 30. Okay, and if we see the market push back below 1.62, we're not succeeding in this bullish attempt, and we could, I would stay out of it. I would look for the market to continue consolidating, see if it could break back below this low, and look for the 1.6050 area to long. That's my opinion. Okay, I'm not convinced yet that this is where the market will start the rally. And here you see the RSI failing to break above 60. So that's, we wanted to break above 60 to kill the bearish momentum established in this decline. And then if the market pushes above 70, that gives us a more of a bullish, bullish momentum kind of confirmation there. All right. So there's still a long ways to go before we can consider the bullish continuation. We want to see the RSI, like I said, break above 70, and then if it fails to break below 50 and continues back above 60, that's going to be a good sign that the market is going back up towards 1.6450, 1.6470 area. Okay, so that would be your short-term look. What about the longer time frame? Okay, longer time frame, you see the market pretty much sideways action. Okay, let's add the 200 moving average there. Okay, so there is a slight bullish bias, but when you look at the RSI, the momentum has pretty much flattened out. 60-40 wave, it's going back between 60-40, crack below 40 here, break above 60 here. No signs of a trend yet. All right, so basically what we want to see is a break above this high, near 1.6470. Then I would start considering the trending mode. Okay, back towards these highs here. And that would be around, let me see, so I'm going to have to estimate here so I don't, this is about 1.6740. Okay. All right, so that would be your longer term look perspective of the pound dollar, waiting for this correction to complete, and then going for a bullish continuation with a confirmation above 1.6470. Okay, give it some elbow space, 64.70, 65. All right, let's move on. Let's go to the dollar yen. Let me see if I have any questions here. Completely ignore the fact that there was a butterfly at, oh, okay, let's take a look at that. This is what I was talking about, incognito. This is the butterfly, right? Okay, good for you. You saw that too. All right. Moving on. Wow, look at this dollar yen. We're just hovering above the record high, record low here. Let me go down to the 1 hour chart. Okay. All right, so dollar yen, right near the record low. The RSI shows you it's bearish here. It's been below 30, and now it's attempting to break above 60. So we might have a short-term bullish outlook if we break above 60, and if the market can establish this sort of double bottom here. Okay, so break above 77.20. There's a 200 moving average. We can expect some kind of pullback. Okay, what I like to do whenever you have a double bottom is that you look at the middle pivot. Okay, especially when it's shared by other pivots. Okay, like this here, this here, this here. Let me just, okay. So if the market is in a throwback, we don't always have this perfect respect of where the double bottom broke out of, like at 77.20. This is, of course, conventionally, you want to throw back and then it respects the 77.20. But my experience is that often you go in the volatile market, you will come back lower. Okay, and if the market respects this middle equilibrium here near where the market is right now, 76.75 area, 76.70, if it respects that, then we would be able to build a bottom. You see that a lot, sort of bottoming action, a break, and then a throwback into the middle, but failing to break it through the middle, and then a rally. If this was a double bottom, if this was a rounded bottom, it would be pretty much what's called a cup and ladle, right? Cup and ladle. Basically, that's a reversal pattern. But what you also want to see is, of course, your RSI break above 60, break above 70. Okay, now the yen is a little bit too strong for my comfort to go against. So I would not look for this rally to break. Basically, I would look for the rally to end somewhere here in the middle of this 50%, 61.8% retracement level. In fact, a conventional double bottom breakout projection is taking the width of this double bottom and projecting it in the direction of the breakout, and that pretty much gets you towards 78. Yes, Boyke, a throwback is a term I use when the market is coming back from a break to the upside, and then a pullback is a term I use when the market comes back from a break to the downside. But it's pretty much interchangeable. We don't have to be too technical. We know what we're talking about after a breakout. Throwback, pullback. Okay. All right. So that's the dollar yen. Let's go to the 15-minute chart. Well, it's pretty much here just consolidating, giving us a very short-term range here in the 15-minute chart. Okay. So this pivot here, 76.90 area, will be important to break for a test of this 77.20, which is your double bottom resistance here. Okay, so a break above 76.90, 77, look for a 20 pip rally towards 77.20, and if that breaks, we have a double bottom. Okay. All right. Let's go to a higher time frame. Higher time frame really don't have too much to talk about. Unless it's the first time you look at it. We've been bearish. We had this intervention. Every time you have the word intervention, I salivate. I like to go against the intervention. I'm assuming most of you also, wouldn't think that interventions are great. Intervention is not a great place to start a reversal, basically. Okay, so you're going to see that in the dollar Swizzy as well. Basically, longer term, dollar yen is still very bearish. We do see some common pivots here that need to be broken, before we consider any bullish outlook. Okay, so I would say 80 area, psychological resistance of 80 needs to break before we consider the bullish outlook. Okay, and if that breaks, what you actually see, if 80 breaks, you'll get some sort of a double bottom again in the daily chart, and that's a lot more significant than what we are seeing in the 1 hour chart. Here's the double bottom in the 1 hour chart that could be developing. Now, a break below 76, that's going to open up fresh record lows. Where it goes, your guess is as good as mine, but we could take some wave ratio analysis. For example, if it breaks below here, this is actually around 76.35, 76.30. We could use the same logic, the breakout projection. And point down like that. So below 76, we could be going towards 75.50. That makes sense. A 50 pip move. Psychologically, this area, there's no support, so you're just looking for some kind of 50 pip move, whole numbers to look for as support down there. All right. Moving on. I really want to take a look at the Aussie dollar. Where do I start with the Aussie dollar? Let me start with, okay, sure, 1 hour chart. And incognito, you probably saw this before if you're a harmonic retracement trader, right? This Gartley. Talked about this earlier this week in FX Times. Basically, for those that don't recognize the term Gartley or a harmonic retracement, it's when you have this kind of ABC correction and your A and C waves are very similar. Okay, so this is a Gartley, and what you had here is at the 78.6% retracement level, the market flattened out. Now that invites, in this case, this was a Gartley going up, so that invites some bearish intention, but that doesn't always tell you bearish continuation. Basically, what we have here looks like a bear trap. It failed to break back below this low here. So it looks like we could be in further consolidation. This could be an ABC, X, and then look for another ABC correction. Okay? Alright, so I'm looking for further correction in the short term. Let's go to a higher time frame. Actually, let me get out this projection here. Okay. So projection towards 1.06. Now, we know 1.0440, 1.04 area is important. Let's go to the daily to take a look at that. Okay. In the daily, we saw when the market broke below this support here, 1.04 to 1.0440, we saw that break and we had basically a double top. The market broke below it and now we are consolidating. We might be getting a little further correction back up. So like I said before, when you have a double top, you don't always have to respect the support here for the market to show bearish intent. Okay, so if the market does go back up towards 1.06, that is actually a good area for the market to reevaluate. Okay, so it's bullish, 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 back into this double top area. This isn't even the middle of the double top, but there are some support areas here. Okay, some support areas here. Some pivots here. So this zone here around 1.06 could be where I want to, my personal opinion, where I want to short this pair. Alright, so that's the Aussie dollar. Okay, let me move on. Aussie dollar, I just want to jump to the dollar loonie. So we have a double top in the Aussie dollar. Dollar loonie. We might be developing a double bottom. So I'm still in the daily chart, and actually there's something I left out in the Aussie dollar. I'll go back to that, but I wanted to juxtapose the double top in Aussie dollar and the double bottom in dollar loonie. Okay, so we saw the market here. Okay, this parity level. Support, 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 support. Oh, held as resistance, resistance. Send the market down here. One bottom. Oh, this failed to reach parity. Came back down, broke the slow, but it came right back up, and now testing parity again. So a break above parity for me is a double bottom. Okay, and that kind of double bottom, it's pretty much a 500 pip range here, and if you break above parity, that means we're heading towards 1.05 in that type of breakout projection. Okay. In this daily chart, I want to note, doesn't even have data going back. Okay. Well, anyway, we could just compare it to the 2010. Here we had in May we had this rally, test 70, and immediately came back down, right? So that's why here we have to be careful. We really need to see it break above parity, break above this 200 moving average, and stay above the 200 moving average, stay above parity, and then we can consider the market going up towards the 1.05 area. Okay. Okay, so that's a conservative breakout projection, right? I'm not even taking the extreme lows here, because the extreme lows actually go down towards almost 0.94. Okay, so dollar loonie, I would be, this is a naked break. We want to see it come back down and then confirm that we have established a bottom, instead of some kind of action like we saw back here when we had a very sharp rally being faded. Okay. Just one more look at the Aussie. We talked about the double top, right? What is the projection from this double top? Again, I'm going to take the lower top. I'm using a more conservative projection. Okay, this goes down to 0.98, and if you use a slightly more aggressive projection, it could go down towards, or near this 0.97 area, okay, which is your 2011 low. Okay, so 0.97 would be my target below the parity level. The Aussie dollar is also testing this parity level. And so mount here. This is where the market is consolidating above the parity level, trying to reach back into the double top. If the double top maintains, it could come back, breaks parity, then we're looking for 0.97. Okay. All right. Let me move on to New Zealand dollar. Incognito. I've been trying to read what you have to write, and there's a lot of sarcasm. But it's okay, I could take that, but I'm just trying to see what you're talking about. I would love to have a discussion actually with the the charts, but I really don't know what you're talking about. Just pointing to euro tanking 500 to 800 pips. Maybe you're talking about correlation. If the dollar CAD goes up, you would expect the euro to tank 500, 800 pips. Is that what you're talking about? Please let me know. Okay, so let me move on to the New Zealand dollar. What we see here is also, break of a recent trend line, and the market showing us, it killed the bullish momentum. Okay, and here we have some pivots that are hanging on. 0.80, that's also psychological whole support. Okay, so that's the daily chart. Let me go into the intraday chart. Okay, so what I see here, this is very similar to the Aussie dollar, right? You had, this is not quite a conventional harmonic. We broke a little bit above. It's not exactly a C equal A move, but similar dynamic. We had this come down here. This was a bear trap for some further consolidation. Okay. So again, just like the Aussie dollar, I'm waiting for this consolidation. This doesn't look as strong as the Aussie dollar's consolidation, especially. I would keep my eye on the 60 level in this RSI. Okay, if it fails to break above 60, we did tag 30 here, so failed to break above 60, coming back down, I will look for bearish continuation. Okay, so let's see. Let's set it up here. If the market goes up towards 0.85 area, 0.8450, I would start considering fading. Personally, I would consider fading, but again, in that short term, I would look for the market to fade towards 0.80. We don't have a break there yet. So unless we see some really accelerating bearish candles, some Marabuzo candles, engulfing candles near this 0.80, I would start to scale out near 0.80. But consider after breaking below 0.80 a bearish continuation. Okay. All right, so that's the New Zealand dollar. Short-term consolidation continues. I would look for resistance around 0.8450, 0.85. Okay. Now, when we talk about consolidation, there's many scenarios, and then one of the scenarios here, if it doesn't reach that 0.8450 area, and you see the market, candlestick action starting to decline in volatility. We did just have a very volatile week, right? So after such a volatility, maybe we don't have the same volatility in this correction. And this goes for the Aussie dollar too. You have to consider the cycle of volatility being wild and then coming back. So we could be entering in congestion as well. Okay. So we'll look here to see if the market turns here as well, 0.8350. This is a zone for resistance. Okay. Let's move on. All right. You guys let me know if you guys have any pairs you want me to look at. It's 11:40, so maybe another 10 minutes. Let me see what I want to look at. Oh, the Swizzy pairs. Okay, so we saw the dollar Swizzy. Let's go to the Euro Swizzy. And okay, pound yen. Okay. Let me just finish off here. There's this, whenever the market moves on kind of a emotional move, or some kind of, we had the rumor about the peg to the euro. I have to read more into that, but basically, it's sort of like an intervention to me. It's that tone. We want to intervene into the market. We want to intervene against Swizzy's strength. And last time we had that, we all know what happened, right? The Swizzy came right back. As my partner Nick at FX Times calls it, it's like spitting into the wind. So here we have a very strong rally in the 1 hour chart. The RSI broke above 70, so we might get some kind of follow through indeed. Let's go to the daily chart. Now, I'm looking for this correction to end, and I would want to fade it personally. But with such a strong rally today, I would expect some kind of follow through before getting back up, before fading it. All right, so very strong candle here. Let's take a look at where this could end up. Okay, let me. I see. See, VT Trader, you have to set it up so you go back like 5,000 candles or something. Right now, I don't have that set up. All right, so connect these lows here. You see, we basically have this channel up here, and then we had a throw over. So when the market comes back towards this 1.14 area, we could be looking for some resistance. Okay. Right now, we have some sort of consolidation area here, just around 1.1. So maybe we get kind of a pullback before another follow through towards this 1.14 area. From there, I would look for the market to short it at least back towards 1.10, 1.09, and then if that 1.09 breaks, then I would look for the market to come back towards parity. Now that's been what the market has been eyeing, parity level for the Euro Swizzy. Okay, so that's your correction rally target, and then I would from there look to fade towards first 1.10, 1.09, then back towards parity. Okay. All right. Okay, let's go on. And pound yen. You know what? Let me just go get on the pound Swizzy before I get on the pound yen, just to round off the Swizzy pairs, because we saw dollar Swizzy coming back from record lows, euro Swizzy from record lows, and here's another currency pair from record low, and you also see this type of V-shaped reversal going on, right? And again, right above this reversal, we have some consolidation. So yeah, we could get some short-term decline from there, but watch out for the bear trap for another follow through. And let's get in some trend lines. All right, so basically you have this also a throwover of this channel back down, and just like the Euro Swizzy, oh, I didn't do the Fibonacci levels in Euro Swizzy, but okay, I'll get back to that. But here's some Fibonacci retracement, 1.30 near 78.6% retracement, and this declining channel support that was broken could be tested as resistance, and this zone here could give us resistance to fade back into this 1.15 area. Yeah, so just like the Euro Swizzy, similar anticipation. And just going back to the Euro Swizzy, let me draw the Fibonacci retracement. Okay, again, you would be between 61 and 78.6% retracement level. That's a good observation, Michelle. This intervention fear does make the market want to avoid, parity. Okay, so there is that play. It's tricky with the intervention looming above our heads. If you're fearless bear or a fearless bull for the Swizzy, you would look towards parity. But like Michelle said, it's a good idea to not always if the market already gives you a doji candle, for example, before parity, then you would have to consider the fear of intervention, and you might want to get out. Okay. All right. So one last look at the markets in the pound yen. Okay. All right. Okay, so this is the daily chart. We are back to this low here, right? This was March after the disaster in Japan. We had repatriation of funds, and that weakened the yen. But because of risk aversion, the yen is still strong, just like the Swizzy, just like gold. Okay, and I would look for some support here, sure, but I would not look for a reversal. Okay. 1.27 was an important level for me, not in this daily chart, but let me go back to the 1 hour chart. Maybe I could show that here. Okay. So when the market was coming down here, I looked at this possibility, right? This ABC correction. But then I also looked at the 127 level. That was a very important pivot for me. And that was where the 200 moving average was at that time. So broken down, tested 127. Now the market is way back. This is a slingshot back down towards these lows here, just above or just near 123. I think the low is actually 122.15. No? Well, it doesn't matter. Right now, we see some kind of bottom developing. Okay, just like the dollar yen, I guess. No. Okay, you see this pivot here. That's near 124.50, right? 124.50 breaks. RSI breaks above 60. Okay, that's going to tell us some short-term, that's going to give us some short-term bullish signal. And just like I always do, I look at some common pivots near the middle of this range to confirm. So if I get a pullback, but it remains pretty much above 124, I'm looking for a rally, again using this conventional breakout projection. This rally, let's see, tells me 125.75 area. Okay, let's take a look. This trend line here as well. Okay, but I wouldn't be very bullish on this pair until we break above our 127 pivot. Right, so what I want to, my maximum target for this breakout would be 127. More conservatively, it would be 125.75 area. Okay, let's take a look at Fibonacci retracement here. Okay, 125, even 125.60, 78.6% retracement. Okay, now if it breaks 127. Then I would look for the market. It's pretty much ranging, right? Break above 127, and if it holds above 127, we could be going back towards these highs near 130. But that's not the likely scenario in my opinion. I would look for this rally to be short-lived and the market to just continue to hammer these lows here. All right. Okay, so it's 11:50. We're pretty much wrapping up today's session here. Hope you guys did get prepared for what's coming up this week. I'll stay a little longer for any questions, and I'm just reading through the chats here. Okay. Yeah, so this is nothing new. I didn't miss any chats. Wow, that's wonderful, Incognito. Your card that I can't even pronounce. All right. So thank you guys for your attention, and just gonna put in a shameless plug here. Every Tuesday I do this Chartist Corner strategy session at 3 p.m. and I'm joined by Nick Nassad, our chief market analyst there at fxtimes.com, where we talk about the technicals and the fundamentals. So if you don't have any FX Street event that time, we'd be glad to have you here at fxtimes.com. All right? Thank you guys, and good trading. See you next time.